What's up, everybody? So I did a video yesterday on MSTR, MicroStrategy. And I usually don't get many negative comments when I do a video, but I got a lot of negative comments. But, you know, I probably should have talked more about the Bitcoin. I did mention, of course, the Bitcoin holdings, but I probably didn't spend enough time on Bitcoin. But it is a company. It's not a Bitcoin mining company. It's a company that makes technology products. So that's how I viewed the company. I didn't view them as a company that owns Bitcoin, because every company owns currency. Every company owns cash, and Bitcoin is a type of currency, right? You do have to value the Bitcoin. Same thing as if a company had 100 billion of cash on their balance sheet. If their market cap was 50 billion, something doesn't seem right. But that's actually a trading under cash value. And I've identified companies, and I have never made money on these companies. So if you find a company trading under cash, which means if their market cap, say, is I kind of do these tangents a lot. So if you want to learn kind of fundamentals and understand the market better, then you can watch these tangents. But some people don't like to watch it. It could get pretty boring. So just to give you an example, and I've seen companies like this. I've invested in companies like this. I see a market cap of 100 million. Generally, it's a small cap company. You'll see this. You won't see like a 50 billion market cap company that has more cash. It just usually doesn't happen. But you might see it with a small cap. So and then you look on that balance sheet, and they have 165 million of cash. So you think it's a buy, right? Because the market cap should at a minimum be the cash value. And then of course there's a potential to grow. So you buy it, but the stock goes down, it continues going down, and you don't understand that. Because one thing you have to remember is cash burn. And you could look at a statement of cash flows, define the cash burn, look at their quarterly operating cash flow. It's the first section of the statement of cash flows. And if you see they have a quarterly cash burn of I'm just throwing out a number, 30 million. Can everybody hear me? Could someone comment? I'm getting paranoid. No one can hear me. Can someone hear me? Someone comment. Can you hear me? I just want to make sure the stream is working. Okay, good. Okay, so if they have a market cap of 100 million, cash 165 million, then the quarterly cash burn is, according to the operating cash flow, is 30 million. That just implies that in 2 quarters they'll be trading at the appropriate level. Their cash will be 100 million. So it's just like if you have money, doesn't mean you're a successful person. If you're just good at borrowing money from people, or you stole money, whatever, anybody can get money, but growing money is the hard part, and that's what people don't realize. So cash is kind of meaningless. It's just a tool to grow the company. Okay, so that's my tangent. So maybe I shouldn't have went on a tangent because I lost about 6 subs. But anyways, or viewers. So MicroStrategy, according to their 10K, They have 16,000 Bitcoin. Price of Bitcoin is 67K. I just looked it up now. So the value of their Bitcoin is 12.7 billion, which is a ridiculous amount of Bitcoin. Oh, I pulled up Microsoft. MicroStrategy, 25.5 billion. So the market cap is almost double. It's almost double their Bitcoin. So I think it's a Bitcoin play because the companies has had revenue of 500 million for a decade now. They haven't even grown their revenue at all. Wait, 500 million. Yeah, I think it's, I'll show you on Simply Wall Street. Mr. That's the ticker. I'm supposed to be at work, so don't tell anybody. Hope my boss is a sub, so he might get a notification I'm streaming. But my wife's car broke down, so that's kind of why I came home. She needed my car. Anyways, so so their revenue was 557 million in 2013, and you could see how steady it is. It's 500 million, a little less than 500 million currently for 2023. That's a lot of revenue. I mean, but you need, when you invest in a company, you need to see growth. You don't invest in a company so they flatline. That's pointless, right? You can have your own small business and have 5 million of revenue every single year. You have a small business, you employ yourself, you employ some people. That's fine, but yeah, net debt is probably a better tool than just looking at cash value. But Richie made a good point. Net debt is but the thing you have to consider when you look at debt is that you don't have to pay off all the debt at once. Like if you take a loan, say you take a loan for $1 million, and you might use that loan. You might buy a home with that loan. You might start a business, but you pay it off over like a decade or 20 years, 30 years. So, so there's no reason to like. You should subtract out debt, but you do have to remember that the debt might be not due for a number of years, 20, 30 years. So they do have time. That's the purpose of taking on a loan, like to buying a home. So you could buy a home and over 20 years, you pay off the home because most people can't afford a home. They need help. And usually a bank won't demand you pay the whole loan up front at any point. Commercial loans maybe, but a residential loan. So just something to consider. But anyways, they crashed today, which was awesome. I don't care. It's awesome, but I usually don't get the like versus 93% of the people who liked or disliked. It had a 93% approval rating, which is really low. I rarely get. It's usually 100 or the high 90s. So it wasn't the most liked video. I kind of use I have the same approach. So if you've been around for a few months or a few years, I have the same approach. I try not to deviate too much. So I do understand why people got annoyed, but if they were a Bitcoin miner or they were a pure play Bitcoin company, I would have done it a little differently, but they're a company, they're a business. They generate revenue. They try to generate profit. They never did generate profit, I don't think, but so some new people liked the video. I'm trying to look at any negatives. Somebody wrote today, price will bounce back. So I just wrote, then buy Bitcoin. If you're really like a pro Bitcoin, because it's a Bitcoin play. I mean, it's not just buy Bitcoin. Why buy this company? Why take a risk on investing in a company? Well, I predicted, of course, this is like a crappy stock that happens to be buying a lot of Bitcoin. So I'm at 700. That was my prediction. So, and someone wrote, someone made a comment. Oh, that must have been my post. Oh yeah, he wrote, you pegged it again. And I just responded, I got lucky for the 100th time. Because if you ever get it right, you got lucky, but if you miss it, you're an idiot. Somebody wrote, destroyed the price with this video and all my savings with it. As if my video gets a lot of views, that it would affect the stock price at all. And he goes, what on earth are you doing? I have a feeling people who wrote negative comments didn't watch the whole video, because I kind of have it's a thorough process. I go through everything. I talked about Bitcoin. I showed, which I think is an important thing to look at, which I don't think many people consider, is comparing this stock price to Bitcoin. And somebody was on my stream yesterday when I talked about this, when I showed them I don't know what's going on. I'll show you the, okay. So if you look at this stock over 5 years, someone bought April 12th, 2,500 call. Okay. If you look at this red line is Bitcoin. It's the price of Bitcoin in 5 years. It's up 1,500%. This stock is the blue line, which is up 900%. But you could see it's like it's very very similar. It moves almost in parallel. When this goes up, I mean, it does trail it a little. Bitcoin is a little more aggressive with the movements, but when Bitcoin goes up, sort of this stock, it also goes up, just not as much, but it goes up. When this Bitcoin comes down, it has similar. So it looks pretty similar, right? Now, the interesting thing, what I was trying to convey in the video, if people watched it, is that in the past month, you can see in the past month, they were like neck and neck, right? And then, what date is this? And then February 26th, this started really surging, which it shouldn't do, because it should be pegged to Bitcoin. This went up in 1 month. It went up 118%. That includes today's drop, because I did this video yesterday and it was up probably like what, 150% in 1 month. Bitcoin's up 30%. So this just blew up starting February 26th. While Bitcoin rose, it rose at a decent rate, but I mean, this stock it doubled. At the same time, Bitcoin went up, what does it go up? 5%. So somebody on the stream who on the stream, I don't know if you're here today, said this is a good short? And I go, that's exactly what I'm trying to say. Not that I don't usually short things anymore. I used to play options. I don't play it anymore, but it's definitely a good short. You just gotta have brass balls. You can't get scared, and you have to be willing to lose it all, because options, it's such a timing thing. And we missed it kind of. If we would have bought the options on Friday, we would have been good, but we kind of missed it today. But there's still a big gap between this and Bitcoin. It should not be that much spread apart. But what I did want to do on this video is I wanted to go through the company's filings to see how much more Bitcoin they bought, because this is as of this is from their I'll put it here, 12/31/23. So this is from their 10K, which is everything through 12/31/2023. But and I was looking at their website, they did buy more Bitcoin. I really hate their website. It's not that user friendly. I have a hard time finding things. Okay. So let's look at the news and press releases. And if you want to learn about a company before everybody else learns about it, you could read 8Ks. Those are announcements, like the CEO gets replaced, or they have a new accounting firm, or they're acquiring another company. It's good to get this information before everybody else gets it, so maybe you can take advantage of any stock price movements. So let's look at the articles after MicroStrategy announces early release video webinar. Let's just see how much Bitcoin they bought. Okay, this is just they announced their fourth quarter results. So we do have 31,755 Bitcoin acquired. Okay, that's just how much they acquired in the quarter. This is new, right? 12K last week. Okay, so they issued more debt, 782 million, to buy Bitcoin. I wish they'd said how many Bitcoin they're buying. $782 million, but this was on 3/11. Let's see what the price of Bitcoin was on 3/11. March 11th, it was 72,123. Now, how much did they raise? $800 million, 0.6% convertible note. I thought I just read a different dollar amount. 782 million. Okay, because they have to pay fees to the investment bank that helps them. So $782 million they received from issuing this. Equals 782, 123, 123 over. So they added 10,844 Bitcoins. That's in March. And the price today is 67. So I'm just trying to figure out the value of their Bitcoin. That's all I'm doing here. I know they paid more for it, but I'm using this to figure out what their Bitcoin's worth. And it doesn't matter how many Bitcoin they have. They could have 1 Bitcoin or 1 billion Bitcoin. Their price should move with Bitcoin. You guys know what convertible notes are? Convertible notes means the holder of the note, it's a debt instrument. The holder of the debt instrument receives interest on the debt and will receive principal payment. Like if you say you bought a $10,000, you put $10,000 towards this 800 million, you would receive 0.625%, which is ridiculous. Because I think they're usually in $10,000 lots. So they're paying annually, which is really nothing, $5 million. But if you had a fund, right, and you wanted to buy these notes and put it into your fund, if you're an investment manager, you'd buy a $100,000 note, which is part of the 800 million, and they would pay you $625 of interest each year. And then when the debt matures in 2030, you would get your entire $100,000 back. But you do have the option, the reason it's called convertible, you do have the option to convert the debt to equity. And instead of getting your principal back, the 100,000 principal back, you could get stock in MSTR. And so it's trading at 1,500. So say your exercise, it's probably written in there, but I'm just gonna make it up. Say the exercise price was 1,800. So you could buy. It's probably higher because whatever it was, it doesn't matter. Say it was 1,800. The exercise price. And if the stock never broke through 1,800 again, you would never exercise the option. You would never convert the debt to equity. But if the stock, say, did shoot up to like 5,000, then you can buy $100,000 worth of stock at $1,800 a share. So you can get like 56 shares of stock and pay only $1,800 per share because you have this convertible security note that gives you the option to do that, which means you would get 56 shares and only pay 100K. And those 56 shares would be worth in the open market 277K. And this is what they want. They want people to convert their debt to equity because they don't want to have to pay back the debt. It strengthens the balance sheet. That's one of the two benefits of a stock price going up. There's really only two benefits. When a stock price goes up, the company only benefits in two ways. One of the ways is the convertible debt converts to equity, and the other way is the company can issue more stock at a higher price. The higher the stock, the less dilutive the issuance is. So it's 2,300. Okay, thanks. Yeah. So I knew it had to be higher because when they wrote this, it's probably, but it works out the same. Oh no, they actually say 1,500 here. The conversion rate for the notes is approximately 1,500 per share. I wrote 1,800. I was just writing a number, but it's 1,500. Maybe they did a different round of convertible securities that converted at 2,300. Because this article was 311. Okay, so it was real recent. MSTR on 311 was Mr. on 311 was 1,500 about. So if you buy this debt, you're not buying it for the interest because you're not really getting any interest. You can get much higher interest in a money market account. You're buying it because you think that this is a play on Bitcoin. You think the stock will go up. Okay, so that was 311. MicroStrat. Okay, then 313. Proposed private offering, 500 million. Oh, so this is proposed. It's not. They're letting us know that the debt is out there. We can buy these notes. So it hasn't closed yet. So I don't think I can count this as part of their Bitcoin holdings. They announced that, you see, that it intends to offer, subject to market conditions, $500 million of principal of convertible 30. So that we can skip. And the next PR is, okay, so maybe it was that last PR. Today announced $525 million aggregate principal of 0.875 convertible note. I mean, has anybody seen this before? I've never seen. It's kind of like if we took a loan at the bank and bought stock with the loan. I mean, I'm not saying that's the worst idea in the world, but it's not a good idea. You don't lever up. But apparently they're taking on debt to buy Bitcoin, and they're buying it at 70,000 per Bitcoin. So, okay, so the net proceeds 515 million. Okay, let's just use the 515 million. So it's roughly another 7,600 shares. So it pushed their Bitcoin holdings to 14 billion, which is a massive number. See, if they were like Microsoft, and they used, not that I would want Microsoft, not that I think Microsoft should do this, but if Microsoft or a company with a lot of cash use like a few billion of cash to buy Bitcoin, I know it's an investment. It's a little risky. But it's crazy that they're taking on debt to buy Bitcoin. I've never seen this before. I'm sure companies do it, but I just never seen at this scale. I don't think anybody's bought Bitcoin at this scale before. Plenty of people buy Bitcoin, tens of billions of dollars of Bitcoin, but they use their money. They don't take on debt to buy it. It's just it's like a gamble. Like when you start a business, I mean, you want it to be successful, but when you start it with someone else's money, that's what an IPO is. It's somebody else's money. You have less skin in the game, so to speak. Like when I started my business, it was my own private business. I used my savings. If the business failed, I would have been in trouble. I would have lost a lot of my savings. I wouldn't be homeless, but I would have a lot lower amount of savings. I would lose like at least a year or two of getting money from working. It's tough. A lot of people can't do that. But when you play with other people's money, it's almost like, they're not as careful. That's why I have a hard time knowing if the CEO is good. I know like a Warren Buffett's he cares about his investors, but it's hard to know people's personalities because what you read on paper, yeah, JR Mr. Photographic is exactly what it is. It's a loop. This happens over and over, and the same people sometimes open up company after company, and some people even who's that guy? Shit, I can't remember his name. He lost a few hundred. He lost like $50 billion in like a day or 2 days. Really scummy guy. He kept getting total return swaps. I want to say Comcast. A lot of like legit companies. He kept buying total return swaps. I'm sure I'll see it. Swaps. I actually went through the process of how he did it on my video, and I think it's interesting. These kind of investment bankers, Asian guy. It was definitely an Asian guy. He lost like in one day. He lost like 50 billion. Does anybody know total return swaps? I don't think. Who was it? Damn. And I'll just write $50 billion loss. Archegos. Yes, Archegos. Thank you. Archegos. And he was like a scummy guy. He did a lot of under shady things. But I think I explained it pretty well in my video. I'll show you the stock price, Viacom and Discovery. Okay. Actually, Viacom is not, they merge, right? Discovery is also, well, now it's Warner Brothers Discovery, but it was just plain Discovery before the merger with AT&T. It's so hard to remember the names. AT&T spun off Warner Brothers into there's a weird name. It was the first time I ever heard of this term before, and it was AT&T spun off Warner Brothers using a reverse Morris trust, which is a way to spin off a company but shield yourself from paying taxes if you time it's in a certain way. It's not a common thing, but it's a thing. Okay. So here it goes. So this is, I don't know if I'm going to be able to explain this well, but I'll try. 121 to 421. Okay. Okay, so this is going to be a little hard to explain. So what he did, I mean, one guy did this. One guy, I mean, obviously other people bought the stock. His average cost per Bitcoin was 31K. But he keeps buying more Bitcoin, so he's dollar cost averaging up. So this is what Bill Wong, right? Bill Wong. Now that Bill It's spelled weirdly. HW, something like that. Yeah, HW Angie, Bill Wong. Okay. So this is how he did it. So he kept, this was one of the bigger companies he bought, but he did buy other companies. He would use total return swaps. So he would go to an investment bank like Bear Stearns or JP Morgan or Goldman Sachs, Citibank, one of those big investment banks, and he would say, I want to buy $10 million of Discovery. At the time, it was just Discovery. It wasn't Warner Bros. Discovery. So, and then he says, I don't have the entire 10 million. Can I just pay you 1 million, and then you put up the other 9 million? And JP Morgan's like, yeah. So you want to buy 10 million? We'll put up 9 million, and you put up 1 million. And then JP Morgan says, if the stock does start going down, if it does fall, say the value of the stock falls to 9 million, that means JP Morgan would have to sell it right away just to get their money back. Because if it goes to 8 million, JP Morgan would lose $1 million. Because JP Morgan puts up 9 million, Bill Wong puts up 1 million to buy 10 million of Discovery stock. So, and Bill Wong obviously pays them like $100,000 fee to do this. I don't know what the fee is exactly. And then so the way it's kind of like the contract's written, JP Morgan says, once the stock price, like the $10 million, if it falls to 9, like the value of your Discovery with us falls to 9 million, you have to post another $1 million. And he's like, okay, fine. So he does this. It's called a total return swap. But the street, like people like me and you, we don't see Bill Wong. We just see JP Morgan bought 10 million of Discovery. So when we see this, or when other investment banks see this, they are more likely to buy Discovery, seeing that a name like JP Morgan just bought a big piece of Discovery. They think, oh wow, they may have good earnings, or something is positive with JP Morgan. So then Bill Wong goes to Goldman, same exact thing. He says, I only have $1 million. Can I buy 10 million of Discovery? And then Goldman, same exact deal, says, okay, we'll put up 9 million. You give us $100,000 fee, and then if your holdings falls below 9 million at any point, you have to pay us another $1 million of collateral, or we're going to sell it. And Bill Wong is like, yep, fine, that works. And then, but he keeps doing this over and over and over at like a dozen investment banks. So the JP Morgan who bought it down here, they get their money back. They just break even because you see it went from 2.4 to 3.19 in 6 weeks. He's going between investment banks buying up the stock, and each investment bank is giving him the deal and then not asking him to put up collateral because it keeps going up, right? And because JP Morgan's like, wow, your $10 million is now, is 20 million. So you don't worry about collateral. You have more than enough collateral with us because your stock doubled. But the problem is that people keep piling on the stock. People like me and you, and the stock gets driven up. And then if there's even one slightly bad thing that happens, the company has a bad earnings or just some negative news about the stock, it just comes tumbling down. And so it's just like, it's kind of like a Ponzi scheme. It has to come down at some point, but it goes down so fast. It went on 3/19, it went from 77. So within a week, it collapsed back to where it was. It comes down so fast, the other companies don't have time to force him to put up collateral. So those banks get hit pretty hard, along with us, the investors. What's up, Snookaroo? Well, let's get back to MicroStrategy. So it's an interesting play. He even has on his website a section for Bitcoin. And then if you go to the section, it's just videos, old videos, like 2020 videos, and even 2016 videos. Oh, he has 2024. It's just videos of other people talking about Bitcoin. So it's not really much, not very innovative. Is he? Oh, it is. He's making videos too. Okay, so he is doing a good job of kind of marketing Bitcoin. So he's real bullish Bitcoin. But I always get concerned with these people, like, will they sell out? Like if it hits 80, 90, do they have a selling point? And then you'll get stuck holding the bag on Bitcoin? Is it good, his platform for Bitcoin? Like, does he make you feel more confident in Bitcoin? I'll definitely look at it. I do know him from this company, but I've never seen him talk about Bitcoin. Yeah, I know. Yeah, Chiga Sports mentions he's trying to make university education free. In his 10K, he does talk about how part of his business is to educate people on Bitcoin. That's part of like how they generate revenue. Too bad. Everything's so hard to find on his website. He'll be the richest man in the world. I mean, maybe. It's not his Bitcoin though. It's the investor's Bitcoin. He just gets his salary. I guess we'll just watch a video. I mean, I'm not going to watch a 2-hour video though, but brilliance of Bitcoin. Okay, it's 11 minutes, maybe. Okay, I feel like an idiot. I put I guess it changes the settings so only I could hear the sound. I could play it on my phone, but forget about it. It's not going to sound right. So let's go back to. So does anybody know other companies buying Bitcoin? Maybe I'll look at what companies own Bitcoin. MicroStrategy is first. Well, Marathon. Yeah, Marathon is a mining company. So that is their business model. So how many? But I guess it's the same concept. They use investor funds to mine Bitcoin, and that's the investors own the Bitcoin. In December 2023, Marathon acquired 2 operational Bitcoin mining sites. Okay, but how much Bitcoin do they own? Marathon Digital. Okay, let's go to investor relations. Let's go to SEC filings. Okay, the 10K. So if you want to know anything about a company, it should be in the 10K. It's not easy to find every single thing, but it should be here somewhere. It's going to be a lot of hits on Bitcoin. Let's go to the balance sheet. That should they have to list on that balance sheet. Okay, digital assets 639 million. Well, that's gonna be different things, but that's a lot lower than 25 billion. That 13 billion. They're 14 billion. So it's not even, it's day and night the amount of Bitcoin this company has. 13 billion. They have like 12 times as much Bitcoin. Yeah, it's all Bitcoin. It's all Bitcoin. But they're kind of creating Bitcoin by mining it. They're creating Bitcoin through the blockchain. But MSTR is doing it a little different. They're just buying it. They're issuing debt and using that debt to buy Bitcoin. And that's a good business model if Bitcoin goes up. It's kind of like the housing boom. As long as house prices kept going up, the world would have never went into a great recession. But that can't happen. Things don't go up forever, especially when they artificially go up. So there's a big crash. And I'm not bearish Bitcoin at all. I actually like Bitcoin, and I think it's here to stay. I'm not a big fan of the 15,000 cryptocurrencies that are being traded. I think that's ridiculous, but I think Bitcoin's here to stay. But I don't think it's a great investment. What's it called? Who owns the the most Bitcoin. $1.1 million Bitcoin. Satoshi owns the most. They own 200,000. They must be one of the top. They must be up there, right? There we go. Okay, launched in 2009. They're big on Bitcoin. Bitcoin had a market cap of 500 billion. It's over $1 trillion now because it's gone up a lot since this article. It's probably like 1.1 trillion, if I had to guess. 1.3. Okay, 1.3 million active BC holding addresses. I own $200 of Bitcoin myself. I bought it to gamble on this poker website, but I didn't use it because I was buying like a few $100s at a time, because when you pay in Bitcoin, you don't have to pay fees. But I stopped using the website, so I bought 100 of Bitcoin on Venmo. Now it's like 220. Okay, individuals with largest Bitcoin holdings: Winklevoss, Cameron and Tyler Winklevoss. $40 million in trades each day. They started hoarding Bitcoin back in 2013. Sheesh. God, imagine that, in 2013, buying Bitcoin. Michael Saylor, the founder of business analytics software company MicroStrategy, has served as CEO until early August 2022. Before, oh right, he's just a founder. He's not CEO. He's chairman. Yeah, I saw that on Simply Wall Street. He's not. Saylor, one of the most well-known internet bubble executives, became a multi-billionaire in the late 90s as a result of his ownership of MicroStrategy. The SEC then filed accounting allegations against Saylor's company and fined it $11 million in penalties. The company's stock crashed as a result of reissuing the accurate financial data. So he was fudging the numbers, which is a common. I was wondering, because when I was looking at their stock price, I was like, this company, I can't believe it's been around this long, because it goes back to like 1998, and the peak of the stock was in 2000. That was the peak, but they did a reverse stock split in 2002, and the stock didn't really move too much until recently. Obviously, it's shot way up. The company's stock price crashed. His net worth decreased $6 billion. He's a huge Bitcoin advocate, calling it a bank in cyberspace run by irrecorruptible. That's what I do like. That I like that you get the money quickly. Like sometimes when you buy things or transfer money to a friend or transfer money even to yourself, you sell stock and you transfer the money from your broker to your bank account. It takes like a day, sometimes even 2 days, and like it's just annoying. Why did it take so long? And sometimes you have to pay a fee. That's why I do like Bitcoin. Like it eliminates all that headache, and there's less chance of someone scamming you out of the money. When it's at a bank, anybody can hack into a bank. Bitcoin's pretty secure, unless somebody gets your wallet, of course. Recently has become one of the few Bitcoin maximalists to publicly embrace ordinals. Both Saylor and MicroStrategy are huge Bitcoin investors. So I guess right here, yeah, he's the Supply and demand can't beat it. That's exactly it. It's just supply and demand. It's just that simple. Satoshi, of course, owns a lot of Bitcoin. Tim Draper, he's a big investor. He paid $18.7 million or $600 per coin in 2014 to purchase, wow, 30,000 Bitcoin. That's a lot less than them, but 600 per coin. Musk, he has Bitcoin. Doesn't say how much though. They took the MicroStrategy. That's when they first purchased in August 2020. They purchased the first batch of Bitcoin. They were concerned about the U.S. dollar, how it's getting weaker and weaker. This investment reflects our belief in Bitcoin as the world's most popular cryptocurrency. It's a dependable store of value and attractive investment asset with more long-term appreciation than holding cash. If you're really concerned about, I mean, what do you guys think? I think if you're concerned about the dollar, or you're concerned about, I think just buy real estate. It's kind of a safe investment, and it's not as liquid. You can't. It's not like a stock where you can just sell it any day the stock market's open and get your money. So it is a little hard to get money out of it. But you could refinance if you need money. You could take a lien against the house, and it's a pretty good store of value. People need to live. People need places to put a roof over their head for themselves and their families. Real estate is not controlled by you. It's not decentralized. It's illiquid, and it has expenses. I think the biggest concern is illiquid. Definitely has expenses. So it's not like a stock where you don't have to pay anything. Like if the company's factory blows up, you don't have to pay anything. Like your house, if the roof caves in, even if it's a rental, you have to spend a lot of money on that. So that is true. But I do think it's a pretty secure and safe investment. I was thinking of upsizing. I was thinking, should I buy more? Should I use some of my gains from Meta and upsize my home? Purchasing power for US dollar goes bonkers down over time, where Bitcoin goes in the exact opposite direction. It's just too volatile, Bitcoin. I mean, I do like the idea of Bitcoin and cryptocurrency. It's just, if I want to buy a currency, I want the value of the currency obviously not to go down. But I mean, it's too risky if I buy a currency and then it goes down 50%. I know there's potential it could go back up again, but I don't want to sit and wait years. Exactly. Volatility will reduce. It'll limit. Volatility definitely will decrease over time as more people buy into it. A lot of things have to happen. I guess that's true when a product first comes out. I remember like VCRs when they first came out, they were really expensive, like literally like $1,000 in the 80s. And then more people started making them, and then they became much more affordable, like $200-$300. And then they started getting less popular, and they were like $50 each. So I guess that's like anything. Like once there's enough supply or something, and there's competition, it kind of evens out the pricing. Yeah. Okay. Hut mining infrastructure. They mine digital assets to become Hut 8. So I don't think anybody has as much Bitcoin as this company, except maybe this Satoshi guy. If he isn't even a real person, I don't even know if it's a real person. So I guess they have the most Bitcoin out of anybody in the world. Is that a fact? Can anybody confirm that? Because who owns the most Bitcoin? All these articles are old, like 6 months old, a year old. So it's hard to really. I generally don't like investing in commodities like gold. Or oil. I'll invest in I'm invested in ET, Energy Transfer, a midstream oil company, and their price is correlated to oil, but I won't invest in oil because oil has no intrinsic value. You have to do something with the oil. And so I invest in companies. So that's why I usually wouldn't invest in a crypto, although I wish I did. But I don't know if I would have held it. Because I remember I remember when it was like 400 or 500. Let's see, 2014. I remember I was talking to somebody. Yeah, when it was like 500 in 2015, and it had a big, and I remember it had a big crash at one point. I don't know. It was like 300, then it went to like 500, then it went down to like 200. So yeah, of course I wish I bought it, but I don't know if I would have sat on it for almost a decade. It's hard to completely agree to the slowly decreasing supply with halving is fixed in the Bitcoin code. But the thing with Bitcoin is that you can split Bitcoins apart. Like one Bitcoin, you could split into 1,000 Bitcoin. One 1,000th of a Bitcoin. So you get 1,000 pieces of one big Bitcoin. So even if demand gets really high, and one Bitcoin is like $1 million, you can just buy 1/50th of a Bitcoin, and then you have $20,000 of Bitcoin. That's 1/50th of a million, and then you can use that. So it doesn't matter how much demand there is. Just the price of one Bitcoin will just continue rising, and you don't. It's not like currency, because if $100 bill suddenly, like the value inflation got out of hand, and $100 bill, you'd have like a can of soda was 100, then a can of soda was next month like $10,000. So you have to carry like a big bag of bills with you to buy a can of soda. But with crypto, you don't need like to carry all that stuff. It doesn't matter if you have one small fraction of one Bitcoin, you can use that to buy like a house. It was like in Russia during the Cold War, like someone they had a wallpaper of their house, so they used rubles, which is right. Instead of going to the store and buying wallpaper, they used Russian rubles because it was cheaper to wallpaper your house with currency than to because everything was like just to buy a sandwich was $50 billion. So you would just use the currency and just tape it along the wall. That's how inflated Russia and Germany were in the mid 20th century. Did you ever hear that story? I don't think it's true though, but it's a good story. It has a good image. I do remember like seeing somebody with a like what's that called? When you pull the wheel of the wagon. Somebody was pulling a wagon full of money just to go grocery shopping. Maybe that was Germany. Maybe it was Ukraine, not Russia. Like that's how inflated. Like it would, one day a sandwich was $1. The next day it was $1 billion. It was just like the inflation was so out of hand. That's why we live in such a great country. We have such a good fiscal system. We have really, really good economists. We have they're on top of things. They manage they manage the money. They manage the inflation really well because inflation is just a tax on savings. That's all it is. If you have any cash, like in your savings account or in your wallet, you just got hit hard with inflation. But if you own a hard asset like real estate or a stock, it generally moves with inflation. It might not move perfectly, but if you're in a high inflation environment, you want to own assets. You don't want to sit on cash. But if you have a lot of debt, it could like eliminate your debt. That's why the U.S. economy, some people, I used to think this too. I used to think like it would be good if we had deflation, because things keep going up and it gets more and more expensive but like, why can't things go down? So I could go back to the old days where I get fill up my car for $10 or $15, like $1 a gallon. And then obviously wages would have to come down too, right? But everything comes down together. So I go, it would be a lot easier. So we don't have to deal with everything going up. But then the U.S. government would never allow deflation because there's so much debt. And if you have debt, if you say you have a mortgage, $100,000 mortgage, and it's 2024. Well, let's just say $1 million mortgage because it's and I'll show you why deflation will kill the U.S. economy. I'll just do 100 to make it easier. I'm going to just jump it ahead 5 years. Say you took a loan. I know this wouldn't happen, but just to convey my point, so you know why what I'm trying to get to with deflation. Let's say you had a jumbo. What am I saying? What's it called? What's that called? The lump sum loan. Where you pay the entire lump sum. Is it zero interest rate loan? I can't remember the name of the term, but you pay the entire principal at the very end of the loan. And you just pay, like, say it's 5% interest. You pay $5,000 a year on this $100,000. What's that term? It's when you pay the entire principal at the very end of the loan. No, there's a term. It's not like I know when you have a camera in your face, you're not. You pay all the principal on the last payment. Yep. Absolute. No, there's a term. It'll come to me. What's it? A bullet loan. Bullet loan. Okay, so say you have a bullet loan, and this is not real life because you wouldn't get a bullet loan for a mortgage. If it was a commercial property, we did a lot of bullet loans for commercial properties. So your loan balance is kind of fixed. And let's just say they gave you 5%, just because they're not going to give you 100,000 for free. So you pay 5,000 a year, and then in 2064, which is crazy, that would never happen. But say in 45 years you pay you pay off your loan. That's a little too aggressive. That's not aggressive enough. Let's just pretend your salary goes up 15% every 5 years. So when you have to pay off the loan due to inflation, for logical reasons, you're making more money. So you can see why inflation makes debt kind of worthless, because you're making more and more money. So the U.S. economy is the same thing. If we made less money, our debt doesn't go down. If we got a raise at our job, right, we don't have to pay more on our mortgage. Or if we lost our job, our debt doesn't decrease. It's fixed pretty much. So if there was deflation, you would never pay off your debt. Your mortgage, you would never pay it off. People have a hard time paying it off now and they're assuming they're going to make more money as they get older and learn more. So that's why we couldn't, because it's just like the amount of debt we have, we would definitely go bankrupt. Does that make sense? Yeah. That's why he's leveraging Bitcoin. Yeah, maybe we should all buy Bitcoin. I was thinking of buying it when it was 40. I told my wife, let's just go all in on Bitcoin. I go, it's going to hit 100,000. I remember this was like in 20. I think that was a while ago. It wasn't 2021. Yeah, I don't remember when it was. Maybe it was 2021. I was like, let's just go all in. This thing is going to keep going up. So who here owns Bitcoin right now? And how much? Not how much. What's your cost base? How much did you buy it for? But it's the same theory with your credit card. When you have to pay like a 15% interest rate on your credit card, and you never ever pay your credit card off because the interest is always so high. That's the same thing. We really need inflation to survive, unless you're debt free. If you're debt free and there's deflation, you're killing it. But most people are not debt free. Most people have inflation. I'm gonna have debt. We are trapped into thinking we need inflation. No, I just explained it. We need inflation. It's not a trap. Well, I guess if you're coming from the point of view as we're a highly indebted country, so in order for us to maintain our lifestyle, we need inflation. That's true. If we weren't I'd be fine because I don't really use debt much. we're going to print money until we collapse. Yeah, I used to worry about printing money and inflation, but we're such a strong and healthy economy. There will be things that bring us down, like the mortgage crisis, but we recover. We're very versatile, so I wouldn't worry too much about that stuff. Continue buying, buy real estate, buy stocks. Don't feel you have to hoard cash. Countries aren't buying our debt. Yeah, I've heard that before, but I don't know how accurate that is. Does anybody want me to do DCF or look at a ticker? I have a little time before I have to head off. Okay. Who owns the most U.S. debt? I think that's China and then Japan. But all right, Zim. Yeah, let's look at Zim. I haven't looked at Zim in a while. Another stock that people really got annoyed at me for. They bought Zim at the peak. Wow, it's down to 954. 1.15. It's just too volatile, the shipping industry. There's too much uncertainty. It's going to be like a 12% whack. 16.8. Sheesh. Let's see Zim. They were making so much money at one point. Wow, they really are projected to. Okay, I have to use my other model. I can't. Zim. Rail shipping is solid. You don't realize how important these industries are. I guess maybe if there was a strike or something, you would realize how important they are. But rail moves so much product in our country. It's unbelievable. It's a very efficient way to move product because it's not expensive fuel-wise. Because a truck is very expensive because there's so much stopping, starting, and it takes so much longer to get there. And then there's accidents. There's so many things that can happen. But rails, it kind of eliminates all that headache. There's really no accidents. There's no the fuel is very efficient. They go and it's very fast because they don't have traffic, and they carry so much. They carry so much product. This is hard to do. Shit. I don't know. I'll just This is just a total guess. Assuming they get back to some type of profitability, which I don't think they will, honestly. But I'm just assuming they'll squeak out a small positive and I actually have them at 1080, which is really close to where they're trading at. But it's a total guess. I mean, they were almost $6 billion of free cash flow, and I'm projecting around 200 million of free cash flow because just shipping rates, they can't make a profit. But like I wouldn't buy this stock. No way. It's way too risky. This is their free cash flow. I knew something was wrong. That's a different company. Okay, here we go. Okay, so we could get a value. 457. Okay. $400 million. Okay, because I mean, it seems undervalued. I mean, you can see their free cash flow is 7 billion. It's projected to be 457 million for 2024. But if it is, they're undervalued by a lot. They slashed the dividend entirely. No dividend at all. They were paying like 100% dividend. Look at 87% dividend at one point. But they were paying like a high dividend consistently, like 16.5%, 60%, 60, 80, and then 2.5%. Now 0. I don't know why it says 2.5% on here because it's 0. Right. Trucks are I mean, it's a little better being on the highway. You do get more, definitely better. It's more efficient in gas mileage, but it's expensive. You have to pay someone on that truck, and it doesn't hold that much product. A train, you do have to, of course, pay a conductor, but it holds it's like 50 trucks. And it's much cheaper gas wise. Like, how much is how much gas to drive 100 miles? I want to see how much money it costs, because gas is much more expensive to drive per hour, because it takes so long to get to some place. But if you fly, it's much, in an hour you can travel, get somewhere really fast on a plane, but it's just so expensive, the fuel. I don't know if you could find a chart like that. How much per gallon of gas to fly? Yeah, it's hard to get equivalents. I know it's a lot cheaper per gallon for flying. Like a plane's only like $3. It's usually about, not quite half. It's usually like 40%, 40% cheaper for plane fuel, jet fuel, than for gas for your car. So any other tickers? Do you guys think Zim? Let me set my alarm so I don't forget my appointment. Okay, Zim. Do you guys trust Zim? It's an Israeli company. I hear a lot of people don't really think they might be up to something shady. Shipping just leads MSTR Energy, the largest diesel refiner in the U.S. is MPC. Zim. Okay, here, investors. Okay, events and presentations. You do get some interesting information from these presentations. But it always seems like the company's doing so well because of course, they highlight the good stuff. Well, this doesn't look so good though. $5 billion of revenue, down 59%. EBITDA down 86%. Adjusted EBITDA, $422 million. $1 billion cash flow from operations, that's down 83%. So they're really, come down a lot. So if you want to see their vessels, 150 vessels, 134 container ships, 16 car carriers. So container ships, on the vessels, they carry 20 foot by 20 foot containers. And inside those containers is what the product, whatever your person wants to ship. So yeah, so these 20 foot by 20 foot, these are the standard size containers that go onto a vessel. So some vessels can carry where's the presentation? Okay, let me download it so it's easy to. Okay. Actually, no, okay, I'm thinking of the wrong container. They're called TEU, 10-foot equivalent. I think that's what TEU stands for. A 20, yeah, 20. I knew it was 20. Okay, so they're 20-foot equivalent. I don't think they're 20 by 20. I knew 20 was in there somewhere. 20-foot equivalent unit, TEU. So how many? That's how you measure the size of a ship. Is how many TEUs can fit on the vessel. So the smaller vessels, 8 times 5, 5,300 TEUs. 6 times 5,500. The biggest ones are 10 times 15,000. So 150,000 20-foot equivalent units. And it carries LNG, liquefied natural gas, which is a hard thing to carry for obvious reasons. But the problem is these shipping companies just keep buying up vessels, and then it's a supply and demand thing. I have a little kind of blurb about it, like that I sometimes talk about in my videos. So how do you So how do you identify a shipping, whether shipping stock is undervalued? So it's really, it's the supplier ships. The supplier ships in the market is highly correlated to the profitability of shipping companies. So if shipping companies keep buying ships, the supply keeps going up, and then each company can't demand as much money, so the rates go down. So you have to get to a point when the number of ships out there, the number of the amount of product those ships can carry is less than the demand, because that's when they start to make a ton of money, these shipping companies, like they did in 2021. But if you don't want to try to, I think the Baltic Dry Index is the way to identify shipping prices. But that's obviously for dry product, like coal, wheat. The Baltic Dry Index. So here's the Baltic Dry Index. Since 2000, that's hard to say. Since 69. So it really shot up in 2005, 2004. But if you somehow could have timed it, I don't know how you could have timed it, but if you would have bought shipping stocks right before this big run up in 2007, that's when they made the most money. They were killing it in 2007, 2008. And then it was a depressed market for a number of years. They were losing money. Some shipping companies went out of business. And remember in 2021, remember when Zim was like $250 a share, and these shipping stocks were going to the moon, and they were paying a 50% dividend? That's because rates got so high, but they've come down. But rates did come back up a little bit at the end of 2023. Then they came back down. Yes, on Baltic Dry Index as a good indicator. Okay, see ya, Chiga. Shipping just leads me to NEP. 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 What's NEP? NextEra. We did it yesterday. I was thinking of NextEra. I was thinking of NEE is NextEra. NextEra Energy. NEP is. Do you know the difference between NEP and NEE? So, NextEra Partner is an MLP, right? Master Limited Partnership. So it's NextEra Energy is the parent company. NEP is the subsidiary. It's a different animal in MLP, because that means at least 90% of the earnings have to go back to the investors in the form of a dividend. That's why you get such a big dividend. I mean, this is a little abnormal, 12%. You're more likely to see 6 to 8%, not 12%. I'm not sure why it's so high. It must be the stock price has been coming down. It's been coming down a little bit. Well, yeah, I guess it was 50 at the end of 2023. But I think it's a good company, NextEra. But to be an MLP, you have to operate in real estate or natural resources. So if you operate in oil, you could be an MLP. If you sell technology, you can't be an MLP, of course. It's only for certain industries. But yeah, let's look at NEP. They're trading at 27, 2.5 billion market cap. NextEra partners. When it says partners, it's down a lot, 55% in the past year. When it says partners, that means you don't own stock in a company. You're not a stockholder, you're a partner. Same thing as if you and a friend started a business, you wouldn't own stock in a company, you'd be a partner. So you own units of this company, not shares. It doesn't really matter. It's the same thing for you. For tax purposes, it might be a little different. 2.4, 1.1, 800. How could it be so undervalued? I guess it's hard to. I guess because it's they pay out so much dividends. 2.5. I guess I can lower that. Yeah, it seems pretty undervalued. It's a subsidiary of NEE, NextEra Energy. So NextEra Energy is the master limited partner. Am I saying it right? It's a limited partnership. Is a limited partnership. Oh no, they're the GP. NextEra Energy is a GP, general partner. So they manage limited partnership. They manage the MLP. You're a limited partner if you own stock. You have limited. You're limited in your partnership. You don't have to make any decisions. You just receive a dividend. It's a form of partnership similar to general partnership, except a general partnership must have at least two partners. A limited partner must have at least one GP. Limited partners are distinct from limited liability partnerships. It's similar to like an LLP. You have limited liability. You can't get sued if something goes wrong. Yeah, it looks pretty good. It looks a big dividend. Dividend was pretty steady, and the stock did, I guess, came down the past 6 months, so the dividend yield's going up. I can't imagine it's going to stay this high. Something has to give. Either they have to cut their dividend a little bit, reduce it, or the stock price will go up. Usually, this is not sustainable. But if you do get the dividend, just take it. Stay with it. Hey, Chris. What's up? We were talking about what's it called? The MSTR stock. It got whacked today. Right after I did my video too, which was interesting. It went down 16%. The thing I don't understand is Bitcoin didn't really go down. It went down 2% today. So it doesn't make any sense. The only thing I could think of is that it's just like I was saying, it started separating from Bitcoin a month ago, which doesn't make sense. So year to date, this stock is up 138%, and it was up 180% yesterday. And then Bitcoin's up 53%. So it should be moving with Bitcoin. And if there's a gap, that's what we call arbitrage. You can take advantage of that opportunity. But there's no guarantee it's going to come, but it's going to come down. So if you want to short it, you know, you could have shorted here, and then a week later it goes even higher. So you don't know exactly when to short it. Mr. has a low float and a 20% short interest. Yeah, that's a recipe for a volatile stock or a short squeeze stock. Low float, high short interest. Mr. use leverage. They use a lot of leverage. They lever up to buy Bitcoin. That's what the leverage is. Could it squeeze? I mean, the stock is generally a short squeeze. I mean, I guess anything can squeeze in theory, but usually a short squeeze is a stock that's going down a lot, like AMC, like it was going down, and people kept shorting it, and then it shoots up. So this stock is already up like 1,000%. So if there was a short squeeze, it probably happened. Like AMC, like it kept getting forced down. They did a split, a 1 for 10, but it was down to like $2, and then it got up to like to the moon. So who knows? Nvidia, I was thinking of shorting Nvidia, and I was like, I'm going to be the only person shorting Nvidia, but I guess a lot of people have been shorting it. I didn't buy Nvidia, but I bought Meta, so I feel okay. That's my AI play, my Meta. I'm up 250%. I bought in 2017, and then I'm up and then I'm up like 60%. I bought it in the beginning of 2022. Wait, I should be up a lot more. 230. Yeah, like 75%. When I sold my business, I had a good amount of money to invest at the end of 2021. So I was doing all my due diligence, and I'm like, the only stock I can I want to just put all my money to Meta. I was like, it just it looks so good, and it wasn't that low. It was 300. Now I bought at 330. It was 375 at the peak. It was down to 330. So I'm like, it's down a little bit. I'll buy Meta, and I wanted to put it all into Meta, and I ended up putting a lot into Johnson & Johnson. Like an equivalent amount in Johnson & Johnson. So I put it into January 2022. I put it into Johnson & Johnson, the same amount. And then after a few months, I was down nearly 60% on my Meta. And I was up 10% on Johnson & Johnson. I'm like, thank God I didn't do what I thought. I didn't put it all into Meta. And now I'm down like 20% on my Johnson & Johnson, or 10%, but I'm definitely down on it. And I'm up 60% on Meta. That just shows you, like, you can't try to time things. Like, yeah, at this point, I'm so happy I got Johnson & Johnson. He's like, I wish I put it all into Johnson & Johnson. Because that was one of the few stocks, because the market really tanked in the first half of 2022. My portfolio was down like 30% from its peak. And then look where it is now. So it's a waiting game, right? Yeah, I think I'm down 10, 15% on Johnson & Johnson. I paid 170 for it. It's 157. Yeah, it sucks, but I mean, it's one of the few stocks that I thought was a good stock. So it must have been at the very beginning of 2022, because I got it 170. And right away, I was up like 10%, and my meta was down like 25%, like within a few months. So I was really happy I got it. And then it got kind of low. It's come up a little bit since that low, but you can see I was break even in July 2023. But it's, yeah. I mean, I got a dividend, but I hate when I don't mind Accelera or PetMed Express. I'm down a lot in those because I knew it was a gamble. I knew I was taking a risk. I'm down like 40, 50% in Accelera and PetMed Express. I don't mind that because I knew I was taking a risk. If I lose it all, I knew that was a chance. I just hate it when I pick a stock that I think is a good stock. One of the few bright sides is this. I'm up 140% on my new. I got this in June 2022 at 430, 424. So I almost timed it perfectly. I wasn't trying to time it. I was down to, I got at 424. I'm up like 150%. So that's one of the few. Yeah, Lily. I wish I got Lily. You know, it's so obvious now, right? But I was kind of like, I had like 50K in my Roth. I had a Roth account, and you have to earn below a certain amount of money, your income be below a certain amount to contribute to a Roth. So when I opened it, I wasn't really making much money. So I had like 50K in my Roth, or maybe like 40K. And then I was like doing these like crazy, buying these penny stocks, doing some options trading. And it was down to like, I think like 22K from doing these stupid things. Because I felt side money. Like it was a retirement account. I didn't have access to it. So then I'm like, okay, I lost a lot of it. I'm almost down half. So I found Nubank. I'm like, okay, I don't want something safe. I want something where I can either make a lot or lose a lot. So I bought Nubank, and now I'm back. I'm up to like 55, I think, because of Nubank. Thank God I did that. A backdoor Roth. Oh, you mean like pay taxes up front now on your retirement? I'm not gonna do a retirement much anymore. I'm not convinced, because you're gonna have to pay if you do a Roth now. That means you put the money in after you pay taxes. So when you take the money out when you retire, you don't have to pay any taxes. But what's the difference? Like you either pay taxes now or pay taxes when you retire. You either get hit now or later. I don't see a difference. The only benefit is, and no one knows this. So let's say my tax rate is 25%. So I put money into a Roth and I pay 25% today. Say I have 100K. I put 100K in. That means, let's just say I earned 100,000 from my work for the year, and that means I received $75,000 after taxes, because you have to pay taxes, income taxes. And say I put 75,000 into a Roth, and if it grew over a decade or two, or however many decades until I retire, say it went from 75 to 190, I don't know. If I pay and say I'm 68 and I want to take the 190 out, if I paid 25% on the 190, it's the same exact thing. There's no benefit to doing a Roth or a traditional. Because if I did a regular one, I would have had to put 100K in, like a traditional IRA. I spelled traditional wrong. A traditional IRA, I could put 100K in, because it's pre-tax. You put it in pre-tax, and then it would grow to more, to like 240K. I don't know, because 100K is a better starting point than 75K, right? But if I had to pay the 25% tax, it would be the same. It would come back down to 190. I could do the math. I've done the math for CPAs before who didn't understand this, but so it doesn't matter. What happened? So if you made 100,000 and your tax rate is 25%, you could put 25. Sorry. You could put 75K into your I've done the math. You could put 75K into your Roth, or alternatively, you could put 100,000 into a regular IRA, because you could put it all in pre-tax, and then that means, say, I'm going to say it grew 200%, right? Your Roth grew 200%. Let's just do 300%, if 200 seems low. 300%. Say it was in there for, I don't know how long, 25 years. That means you get $225,000 check, no tax, because it was in a Roth. You already paid the taxes before you put the money in. But let's just say, for instance, you were able to do a tax-free investment, a traditional IRA. It also grew 200%, 300%, right? But it's the same exact thing, because what's this times 75% of that is 225. If you paid a 25% tax when you take it out, it doesn't matter. It was funny, Blade. I was showing. It wasn't even a tax. It was a financial advisor, and I showed him because he didn't understand this concept. So I showed him in Excel. He's actually a friend of mine, but I don't want to call him out. Now, the only benefit to doing the Roth is if when you retire, if your taxes are lower. Say, for instance, when you retire, your taxes for some reason are 20%. So now you have more money, because now you have 240 instead of 225. But what if your taxes are higher when you retire? What if you paid 30% when you were working? Now it's up to 30%. It's higher. So you would have been better off with the Roth in a higher tax environment. So that's just, I'm just from a pure mathematical standpoint. But from a psychological standpoint, I do think there's some benefit to putting in a Roth, even if the tax rate's the same, because if you put it in a Roth, you won't spend it. Like if you, well, I guess the same thing with here too. You wouldn't spend it. Yeah, I do. I have both too. I have my Roth with that one new bank in it. Then I have my traditional with, you know, my BRK, Meta, and SPY. Like when I turned 18 and I was in college in Buffalo, the day I turned 18, what did I do? I go to the bank and I opened up a Roth. I could bring $2,000. I was so excited. That's just how I was. I just love the idea of not paying taxes when you retire, but I didn't understand. Okay, well, I have a meeting actually in a little bit. Okay, well, thanks for commenting. It's fun to just talk about stuff like this. It keeps me on top of things, and of course, you guys give me ideas as well. So I'll talk to you later, probably this weekend, because I usually don't do during the week. See ya. See you, Mike.